Hello everyone, welcome back to another episode of Ask NDB Wealth mid-month market update for the month of October. I'm Kavin Abesekara and this is my colleague Tejitha Polgolla who will be speaking about the fixed income market.
Thank you, Kavin. So, in the 7th Monetary Policy Review for 2023, Central Bank reduced its monetary policy by 100 basis points. Accordingly, the stand-in deposit facility rate and stand-in lending facility rate is at 10% and 11% respectively. The board arrived at the decision after considering both current and expected developments, including low inflation expectations, and the main objective of this policy rate reduction is to boost economic recovery. CBSL highlighted the fact that they want to maintain inflation at 5% level in the medium term. CBSL expect an acceleration in the downturn momentum of the market rates and lending rates due to reduction in policy rates and significant reduction in risk premium attached on government securities with the finalization of DDO. At the weekly treasury bill auction, which was held in the previous week, the 12 months weighted average yield dropped by 2 basis points. Accordingly, now it's at 13.107%, and the 3 months and 6 months weighted average dropped by 78 basis points and 17 basis points respectively. A treasury bond auction was held on 12th October, where we saw a 3-year treasury bond and 7-year treasury bond was auctioned to raise 25 billion, and in the auction the entire amount was raised at weighted averages of 15.24% and 13.56% respectively. Talking about inflation, the inflation measured by CCPI dropped to 1.3%, down from 4% which we saw in August, mainly due to food deflation. Over to you, Kavin.
Thank you, Tejitha. On the 2nd of October 2023, the Central Bank of Sri Lanka published the external sector performance report for the month of August. The merchandise trade deficit widened in August 2023 compared to the previous year, led by higher decline in export earnings than the decline in export expenditure. Both work remittances and earnings from tourism recorded notable improvements in August 2023, where the earnings from tourism was up 210% year-on-year and work remittances gained by 53.54%. Furthermore, the second tranche of the IMF Extended Fund Facility, which is about $330 million, got delayed because Sri Lanka has struggled to meet the IMF revenue targets. The Sri Lankan rupee appreciated marginally by 0.2% month-on-month, closing at 323.8 rupees to the dollar. However, the Sri Lankan rupee remained a net gain of 12.14% year-to-date. Gross official reserves for September were at $3.53 billion and the Central Bank of Sri Lanka was a net buyer of foreign exchange. During the first half of October, both the ASPI and the S&P SL20 index declined by 4.61% and 4.87% compared to the last day of the previous month, while the year-to-date returns remained positive at 27.37% and 15.42%. The second tranche of the IMF Extended Fund Facility getting delayed caused the market sentiment to remain bearish, and investors are remaining on the sidelines awaiting the government budget. The average daily turnovers for the first half of the month were at $730 million and net foreign inflows were at 97.52 million. Thank you.
Thank you, Kavin. Thank you for joining us with another episode of Ask NDB Wealth.